Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit and Equities. If you like our content, please don't forget to hit the like button. Also, subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. In this video, we will be talking about 5 small companies which are Ambit Capital's hidden gems in the current market scenario. Please watch this video to know more. Now the first stock on the list is Alkylmines Chemicals Limited, which is available at 644.30. The face value for this company is 5 and the symbol for it is ALKYLAMINE. Now, Alkylmines Chemicals Limited is engaged in the business of specialty chemicals. The company is involved in the manufacture of organic and also inorganic chemical compounds. The company has been on a beautiful uptrend for the major part of the year, but since then has largely been consolidating. The market cap of the company is 1314.14 crores, which means that the company is a small cap one. The EPS of 31.51 translates into a price to earnings ratio of 20.45, which is slightly lower than the industry PE of 22.23. The book value of 151.69 translates into a price to book ratio of 4.25, which may be a bit on the higher side. The dividend yield for the company is 0.78%, whereas the promoter holding is a strong number at 74.19%. The 52-week high for the stock is 789.90, whereas the 52-week low is 359.80. Now, Ambit Capital says that this company is India's second largest aliphatic amines manufacturer and has 40% market share. Strong management pedigree, superior technical capabilities and a strong research and development team are Alkyl's key strengths. Foray into specialty chemicals aided a 370 basis point by 456 basis point EBITDA margin by pre-tax return on invested capital expansion over FY13 to 18. They expect the company to report strong earnings growth over FY19 to 21, led by capacity expansion at Dahej due to the increase in methylamines capacity from 16,000 million tons per annum to around 30,000 million tons per annum. They are also going to be benefited by the rising share of value-added products. That current valuations of 21.3 times 12 months earnings remains attractive given the favorable industry dynamics, which is basically due to the duopolistic nature of the industry, huge import substitution and high fixed costs, and also the potential to report strong earnings growth. Now the second stock on the list is Moltech Packaging Limited, which is available at Rs 312.20 and the face value for it is 5. The symbol for it is MOLDTKPAC. Now, Moltech Packaging Limited is a holding company. The company is a packaging company which is involved in the manufacture of plastic packaging containers. Now, the 1-year chart would reveal that this stock has been choppy throughout the year and no major wealth has been created for the holders of this particular company. The market cap of this company is 865.13 crores, which means that the company is a small cap one. The EPS of 11.44 translates into a price to earnings ratio of 27.29, which is much lower when compared with the industry PE of 34.22. The book value, however, is 51.97, translating into a price to book ratio of 6.01, which is on the higher side. The company's debt to equity is 0.6061, whereas the return on equity is 0.1705. The dividend yield is 1.15, whereas the promoter holding is a low number at 35.83. Finally, the 52-week high is 374, whereas the 52-week low is 259. Ambit Capital says that Moltech is a pioneer in the in-mold label packaging and plastic pail packaging for paints and lubricants. Penetration continues to expand, led by the food segment, with EBITDA per kg up structurally, expanded by around 10% year-on-year in FY18. Their thesis hinges on uptake of premium packaging, driving EBITDA per kg steady state higher. They are also factoring in improved visibility in legacy paints segment, New plants are coming up in FY19, and new plants in FY19 would be about 20% of existing capacity. And they are also factoring in the ramp up in the UAE plant, which they believe justifies the around 31 times trailing 12 months PE. Now the third stock on the list is GMM Pfaudler, which is available at 797.45 and has a face value of 2. The symbol for it is GMM PFAUDLR. Now GMM Pfaudler Limited manufactures glass-lined equipment, storage vessels and alloy steel equipment. The company manufactures other special purpose machinery, and its segments include chemical processing equipment, mixing systems and filtration separation equipment, and also others. It includes both the geographical segments of within India and outside India. Now here again you would see that this company has been a slow mover and no major wealth has been created here. The market cap of the company is 1165.67 crores, which means that the company is a small cap one. The company is available at an expensive price to earnings ratio of 41.08, translating into a much more higher valuation compared with the industry PE benchmark of 20.93. The book value of 132.87 also translates into an expensive price to book ratio of 6. The dividend yield is 0.50, whereas the promoter holding for this company is a strong number at 75%. The 52-week high is 939.95, whereas the 52-week low is 710. Now, Ambit Capital says that GMM Pfaudler is the largest glass-lined equipment manufacturer with about 55% domestic market share. They expect the company's leadership to continue, significantly expanding the non-GL business. Higher exports from the parent Pfaudler will aid business mix and materially expand the opportunity. Further, margin/returns should benefit from higher operating leverage and lower capex intensity. Now they expect growth momentum to continue, and FY13 to 18 EBITDA CAGR by average pre-tax ROCE would be around 31 to 18% respectively, and hence they feel that the punchy valuation is justified. Now the fourth stock on the list is GOG Financial Services Limited, which is available at 73.70 and the face value is 1. The symbol for it is GEOJITFSL. Now GOG Financial Services Limited, formerly GOG BNP Paribas Financial Services Limited, is a retail financial services company. The company offers a portfolio of savings and investment solutions. Now the one-year chart reveals that for the first few months of the year, the company was trying to go in an uptrend, but since then has been on a steady downtrend. The market cap of the company is 1753.10 crores, which means that the company is again a small cap one. The price to earnings ratio of 25.95 is much cheaper when compared with the industry PE of 34.47, and the book value of 19.46 translates into a price to book ratio of 3.79, which is not wildly expensive. Now one strong factor for this company is that it is debt free and the return on equity is 0.1369. The dividend yield is 1.70, whereas the promoter holding is also a decent number at 62.12. Now this stock has significantly fallen from its high of 147.05, whereas this company has made a 52-week low of 68.80, which is much closer to the current price. Now Ambit Capital says that this is a play on rising systematic investment plan culture in the country. SIP inflows continue to grow despite market volatility, as rising financialization of savings improves the minuscule penetration of SIPs in India. This currently stands at only 2% of India's population. The company is their preferred bet as it has high granularity of investor base and strong positioning in higher yielding beyond 30 cities, increasing market share in SIPs. Now, Ambit Capital believes that as GeoJit evolves from a brokerage company with volatile earnings and low return on equities to a financial products distribution company, its earning sustainability and predictability will improve, which will drive re-rating for this particular company. Now, the final stock on the list is Lemon Tree Hotels Limited, which is available at 76.85 and the face value for this stock is 10. The symbol for it is LEMONTREE. Now, Lemon Tree Hotels Limited is an India-based company which operates a chain of upscale business and leisure hotels. The company designs, builds, owns and operates its hotels. The company offers 3 brands across various levels: Lemon Tree Premier, which is the upscale segment, Lemon Tree Hotels, which is the mid-scale segment, and Red Fox Hotels, which is from the economy segment. Now, this company does not have a trading history of 1 year, and the till date chart shows that this company has generally been consolidating after a good listing. The market cap of the company is 6,043.58 crores, which translates into a mid-cap market capitalization. The company is not yet profitable on a consistent basis, and the price to book ratio is about 6.33, which is a bit on the higher side. Now, the industry PE here is 63.27, which means that the companies in this industry generally trade at high valuations. The company did not pay out any dividends, whereas the promoter holding is a bit on the lower side at 31.07. Now, year-to-date high for this stock has been 90.90, whereas year-to-date low is 56. One factor for this stock would be that this sector is expected to do very well going forward because of higher occupancy rates, which this sector is expected to enjoy going forward. Now, Ambit Capital says that the stock is a bet on the turnaround in the hotel industry and is a play on the strong growth prospects of the mid-scale hotel space. The latter is seeing strong growth in demand with a pickup in leisure and commercial, as well as the prospects for consolidation. Now, Lemon Tree is the fastest growing hotel in the mid-scale space and is best placed owing to its focus on cost efficiencies. Number 2, its operationalization of hotels in strategic markets at a time when industry profitability will improve. Current valuations, which is at 27 times enterprise value to earnings before interest, tax, depreciation and amortization, while not cheap, does not factor in upsides from high growth over FY18 to 22. Now friends, please don't consider this to be a stock recommendation on our part. This and all other content that you see on our channel is intended to be a piece of news. Also, if you are benefited by the content that you see on our channel, please don't forget to share these videos. This motivates us to keep making more such videos for you in the future. Also friends, the source of this video is present in the description section below. Please go ahead and read it to build more conviction around your investment decision. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.